Are you dreaming of owning a home in New Jersey but just don't know exactly how much you should save up for when it comes to down payment? Well, you're not alone. In this video, I'm going to go over exactly how much you should save up for and all other important costs that you should consider when it comes to buying a home. And if you don't know already, my name is Gabby Maxino. I'm your mom friend in real estate here in Central Jersey. My goal for this channel is to be your #1 resource when it comes to all things real estate and moving in the New Jersey suburbs. And if you're moving in Central Jersey, I would love to be the agent that you choose to work with. Feel free to send me an email on my email down below or schedule a meeting with me using my Calendly link. And with that, let's get into it. I'm going to start with the traditional 20% down payment. Many buyers try to aim for having at least 20% down of the purchase price. Why? It's because they're trying to avoid private mortgage insurance or PMI. So in case you default on your loan, the bank wants this insurance to protect them against any financial loss if ever you stop paying your mortgage payments. Your monthly mortgage payment usually consists of 4 things, and that is your principal, interest rates, taxes, and insurance. And then if you don't put down at least 20% down, then you also have to add this private mortgage insurance to your monthly cost, which will increase your monthly payments. But just because you don't have 20% down doesn't mean that you cannot be a homeowner. There are plenty of other loan options for you that doesn't require you to put down 20%, including FHA, conventional loans, VA loans, and USDA loans. One of the most popular loan programs for first-time home buyers is the FHA loan. FHA is a great option for many first-time home buyers, as it allows you to put down as little as 3.5% down. FHA is also more lenient when it comes to other requirements from the borrowers, including their credit scores, debt-to-income ratios, and other factors. However, they are a little bit more stricter when it comes to the condition of the property that you're actually buying. Since they are not as strict when it comes to borrowers using the FHA loan program, the home does have to be of a certain standard in order for it to get approved. So this actually protects the buyer because you want to make sure that what you're buying is in good condition. Some of the requirements include making sure that there are no peeling paints, there are handrails when it comes to any staircases, and no cracked windows. They also want to make sure that all the appliances are in working order. I personally used an FHA loan when I bought my first home. However, the one downside when it comes to FHA loans, even if you put down 20%, the PMI never goes away. That is the one downside, is that you have to pay PMI for the life of the loan unless you refinance. Now, moving on to another popular loan, which is conventional loans. These loans actually allow you to put down as little as 3 to 5% depending on your situation. Typically, conventional loans do require higher credit scores and debt-to-income ratios when you compare it to FHA loans. The good news is they do offer more flexibility when it comes to the condition of the property. And another plus is that if you put less than 20% down using a conventional loan, once you are able to pay at least 20% of the value of your property, you have the ability to remove that PMI. And the last 2 loan programs that I'm going to be talking about require you to put as little as 0% down. Yes, you heard that right. 0% down. One of them is the USDA loan. The only catch is that your property needs to be located in the USDA approved location. These loans are fantastic options if you are a buyer looking in rural areas. And lastly, if you are a veteran or in active military duty, you do have an ability to put 0% down as well through a loan called VA. VA loan offer great terms and are one of the best financing options for buyers. Before I go over the additional costs that you should consider, it is important to note that if you are going to use FHA or VA, a lot of condos and townhomes are not eligible to use this. So if you're eyeing a condo or a townhome, it's going to be very hard to use an FHA or VA loan because that community has to be FHA or VA approved. Now let's talk about additional costs. What other costs should you prepare for other than the down payment if you're looking to buy a home? Even though a lot of people always talk about how much down payment should you have in order to buy a home, you would be surprised to know that a lot of them don't realize that there are other costs involved when it comes to buying. So let's talk about it. What other costs other than the down payment should you account for? And here are a few that you should keep in mind. First is your closing costs. Other than the down payment, there's also going to be closing costs involved that you have to save for. In New Jersey, that's typically around 2 to 3% of the purchase price. So let's say you're looking to buy a $500,000 home. I would allot for at least $10,000 to $15,000 extra on top of your down payment to make sure that you have enough to go cover the closing costs. What exactly consists of your closing costs? In New Jersey, what you'll typically see in your closing statements for your closing costs is a breakdown of your title fees, recording fees, lender fees, attorney fees, and any credits or debits that the buyer and the seller has to balance, such as if the seller already paid for the first quarter of taxes and now you have to give them back that money that they already paid for, and more. And let's not forget your home inspection. This is not included in your closing costs, nor is it a part of your down payment. I always recommend my clients to get a home inspection prior to buying a house. And these are some of the inspections that I recommend you do. The general home inspection, termite inspection, and radon test. And then, depending on the property, I recommend other more specialized home inspections, such as a pool inspection if you have a pool, a sewer scope if you have a sewer line, or a septic if you have a septic tank. And if there's a fireplace, I also recommend a chimney level 2 inspection. And lastly, if your property has a homeowners association or HOA, then not only do you have to pay that monthly HOA dues, but sometimes they do have certain application fees and other fees when it comes to acquiring a property within their HOA community. So make sure you get all of those details before moving to buying a property that has an HOA. Now that you know exactly how much you should save up for down payment, plus other costs such as your closing costs and home inspection, now let's talk about how to save for your down payment. And it all starts with having a plan. I know that a lot of people are afraid to talk to a lender right away when it comes to buying a property, especially when they feel that they are not ready. But if you are serious, it is so beneficial for you to have a conversation with a loan officer or a lender. Even if you are not ready, they are going to be able to give you a plan of exactly what you need in order to reach your goal. Because it's more than just saving for a down payment. It's knowing if you have the right credit score that you need in order to be approved for a loan program that you're looking to get. Do you have too many debts right now that you have to pay for as well before you can even save up for a down payment? So in order to set a clear goal, it is important for you to know exactly what you need, because it may not just be saving for a down payment. You may also have to pay off certain debts first or increase your credit score in order to move forward to buy a property. But when it comes to saving for a down payment, the first step is to make sure that you set a clear goal for yourself. How much money are you looking to save up to buy this home? Are you looking to put down 20%? Or are you looking to just save up at least 3.5% down in order to get approved for an FHA program? I suggest dedicating a savings account just for saving for down payment. A high yield savings account would be perfect so that it can also accumulate some interest as it sits there. Having a separate account can be very beneficial so that you can make sure that you are on track with your goals. You may also want to cut back on certain non-essential things that you usually just splurge on, because every little thing counts, especially when you're saving for something as important as home buying. And lastly, look into down payment assistance program. In New Jersey, there is a $15,000 down payment assistance program that is available for first-time home buyers. It is entirely possible that you can get approved for this down payment assistance program, but it's something that you have to speak to a lender about so that you can make sure that you are eligible for it. Hopefully this helps you out, and whether you're aiming for a 20% down or something lower, the most important thing is to consider saving and having a plan. And don't forget that there are many loan options available for you even if you don't have 20% down. Again, before I go, my name is Gabby. I'm your mom friend in real estate here in the New Jersey suburbs. I would love nothing but to meet you and help you navigate this crazy process of buying a home. If you like what you heard today, then don't forget to hit the subscribe button, click the thumbs up, and ring the notification bell. See you guys in the next one. Bye.